Hello, everybody. It's been a while, huh? All right. So, in this video, we're going to be talking about basically an amplified version of what we did the last time, right? So, we're going to be looking at how to anticipate the highs and lows of any fractal interval. Now, what I will do is I will frame it within the daily range, right? So, within an intraday perspective. And what you're going to do is you're going to divide any interval of time. But remember, when we say any interval of time, right, it must be a derivative of either a 1 hour, 90-minute, 4 hour, daily, or a weekly, monthly, yearly cycle. Okay. Yes, it can work in others, in other fractal intervals as well, but these are the best ones. Okay, it's universal. It's universal. So let's take a trip down the rabbit hole. Here's what we will be covering. In this discussion, we will be going deeper into how we at the Trading Academy, right, how we use the doubling theory to easily anticipate price moves that occur during any fractal interval of time. So we will be keeping our focus on the power of 3. And please, guys, there is no 4. Okay, there is no 4. 4 is just a means of a quarterly shift because it is a convenient standard to measure business performance. Okay, it's a convenient standard to measure business performance. So there is no 4. Okay, 4 is only used on a yearly basis. All right, on a yearly basis. For intraday price action, okay, for intraday price action, there is no 4. For yearly price action, there is no 4. It is just a measure of a quarterly shift from a yearly perspective. Okay, right. Now, the division of time. The day can be divided into 3 parts. Okay, from 6 p.m. EST to 6 p.m. EST. This is when the daily candle opens, right? So of these 3 parts, you can divide the first 2 parts into 3. Okay, we can divide the first 2 parts into 3 and identify that. And once we identify that, we will internalize the first AMD variant of the day. Now, when you take the 3 parts and look at the last 2, now consider this, okay? Right now, what I just said was we had 3, right? Like that. What I just asked you to do was consider these 2 here. Okay, you will find the first AMD variant inside this. After that, what you'll do is you will take these last 2 and identify the AMD variant here. Okay, now we understand that whenever price forms a high or whenever price forms a low, what do we have? We have some measure of manipulation. So when you see that manipulation, you understand that this high or low is not going to be taken anytime soon. That is the high or low set for that fractal interval. And you can have high RR trades like that. Now, it is not easy. You will find trouble, when you're applying this, you will have some issues with it until you get used to it, until you see the price action that builds up into saying, okay, this is manipulation. Okay, this is distribution. I mean, I guess to say distribution is very easy to spot, but manipulation, we need to see exactly what needs to be taken out in order to consider that a manipulation. Now, if you guys have been watching my Instagram posts on FinServe Corp, you will see that I spoke about stack liquidity. It is a video that I will do as well, most likely the next one. Stack liquidity is essentially relative equal highs and relative equal lows, but it is an oversimplification. What I'll do is I will dive down deeper into what it actually means. And you can take an oversimplified concept and you can have a deeper understanding of what goes on behind it. Okay? Okay. All right, let's take a look at this. Here's the entire day, 6 o'clock to 6 o'clock. We look at the first half of the day right there. So we divide it by 2 and then we divide that by 3. Okay. 6 o'clock, we can see that price is distributing. It's accumulating and then it's manipulating. Okay. So we know that if this is the manipulation, this high is going to be what? The high of the day. After this manipulation, you'll find that price will distribute and then accumulate again. Can you see that? There was a distribution. So we looked at the first two. So you can divide the day into 3. We take the first 2 and divide that by 3. Now we got the distribution, accumulation, and manipulation. Now, when you take the last 2, right, when you take the last 2 intervals of the day and divide it by 3, we can see we can continue from what happened on the left side, or we can bring it to the right side. Okay, accumulation, we saw that this was manipulation, and so then what? Using our brains, you know that, okay, after the manipulation, when price starts to break down aggressively, you know that the distribution has begun. And for you ICT folks, you will see this is a market maker SIR model. Down we go, and then accumulation. Okay, when you understand this, when price is distributing, what happens? The accumulation tends to be to the upside. When we distribute it down, the accumulation will go up. Okay, now in this case over here, we have distribution, right? There's a distribution, and then there's a reaccumulation to redistribute, which turns to be a manipulation, and then there's a distribution, right? So I will do a video on this as well, on the continuity of these things in relation to the market maker SIR model and the market maker buy model, for those of you that want to relate this with ICT's teachings, because it goes hand in hand with ICT's teaching. I'm telling you. Okay, accumulation, and that's all. It's as simple as that. So this should be the end of the video, but what I'll do is I'll take you guys to a live chart and I'll show you how things played out on gold on Friday. And now, since I'm recording this in the weekend, it's Sunday, we'll look at how price is developing on Bitcoin as well. Okay, because here's the thing. If you understand what that first interval has done, you can project every single interval forward. Okay, it's a matter of saying, okay, next is manipulation, distribution, accumulation, manipulation, distribution. You can just label it out, and then you can look at how price is behaving, and you can easily determine whether, okay, that's a high, is that a low, is that a high, is that a low, and you can use ICT's market maker models to use it with. Right, so now when we're looking at this, how to internalize the anticipation of the high of the day and the low of the day. Number 1, the manipulation, right, it forms one end of the fractal period. So if you're looking at the entire day, that manipulation that we see for the day, okay, that's going to be the first high or low of the day. If it's the high of the day, then price is going to distribute and it will form the low of the day. Okay, if it is the low of the day, then price will distribute above, higher, causing the high of the day. Okay, so that's pretty much it, guys. Good luck and good trading. That's just the ending portion of the presentation slide, right? So what we'll do is we will go to the trading view. We go trading view. Okay, and here we are, Bitcoin, right here. Okay, now hope you all can see it. Let's see, yeah, okay. Right, so now over here, look at this. This is the previous day. So right here, until where my cursor is, that's the start of a new day, and everything to the left is the previous day. So the previous day, we can see that this was accumulation, this is manipulation, then price should do what? Distribute. Okay, see how we are distributing. We distributed to the lows, relative equal lows, stack liquidity, and then price is retracing. Fine. Now we understand that the market maker models, they have at least one stage of reaccumulation to redistribution. Sometimes we have 2, depending on how the price swing is, depending on how much volume comes into the marketplace, right? So in this case, we see that this is a distribution, and now price is starting to reaccumulate early. Okay, now we came into the reaccumulation phase. So what do we need to see in order for us to take a short to go down? If we are going down, because there's a lot of liquidity, right? Simple. We look at stack liquidity. Okay, see how this leg of price from low to the high, this one, it took out relative equal highs. So I would say that this should not go. Now, if it does go, it's because we're in a trading range. And to be frank, Bitcoin during the weekend, you can only scalp it. You can't really, take large trades unless we break out of a large daily range. Okay. From theoretical perspective, manipulation, distribution, this is a reaccumulation, right? So we would ideally want to see price start to break down. Okay, if it breaks up, then that means my interpretation of this was completely wrong because of the fact that we are stuck in a big consolidation. Okay. Now, if price is going to do that, if we are going to see lower prices, I would say that we want to see price do this. Go from here, go from somewhere over here. Okay. The reason why that I'm saying, okay, you know what, we could see this one go and then price can start dropping from there is because this high took out this relative equal high. Okay, but this, guys, look carefully. This right here is not a relative equal high. This high and this high is not a relative equal high. Okay, a relative equal high is one that is formed through mitigation. So this leg up has no mitigation of this block. But this guy, these guys over here, they do have mitigations, right? So I would be looking for price to run up there and then change its state of delivery to start moving lower, preferably using my N30 projections. Okay, so if I were to show you one example, let's go back to gold. Okay, so on gold, this is what I was doing in my backtesting period. In gold, we can see that this is Thursday's price action. We run up, come down. What's happening over here? We're going up, right? We're distributing, accumulating, manipulating, and then we are distributing. So when we're distributing, we're looking for longs. Okay, the way we get the longs doesn't matter. We want to see liquidity go, we want to see price come and take out, sell side, you know, whatever POI is there, you take it. We want to see price go long, so we're going long. After distribution, we have accumulation or reaccumulation. Okay, accumulation or reaccumulation. So once we start this manipulation and once we start the distribution, of course, price is going to target relative equal highs. It's not going to let all these stay. No. What do we have here? That means that when we think of this accumulation, we can think of it as a reaccumulation to cause a redistribution to these highs. Did that happen? Yes. Now, after a technical accumulation, what do we have? Manipulation. There. Causing the high of the day. And then we start dropping. So yes, there is a short on the 1 minute chart to go down. Okay. But after reaccumulation, what do we have? Redistribution. So yes, we do have this. So we want to see price try and make its way up just a little bit more. Why? Because if you zoom out, what do we have? See how we have all of this here. See, all this mitigation. Yeah. So this mitigation of this high or this block over here causes this high right there to be stacked liquidity. So that would be your natural drawn liquidity. And the only reason why price is stuck in all these ranges is because we have a ton of stacked liquidity. So there's a lot of order pairing happening, causing a lot of accumulations that need to occur to cause a massive spike up. Okay, so that's what's happening over here. To redistribute up, at least here, right there. Okay, at least right there. I think we took it out, I'm not sure. This high is 2003.60. This is 2003.5958. Yeah, it hasn't taken it out just yet. I'd like to see that as a drawn liquidity and maybe get a pump up over there. Okay, that is how we use this. In the Trading Academy, it goes much deeper than this. Okay, much deeper than this, because if you guys remember, I sent you all a on the Telegram chat, I sent you all a picture of how the doubling theory is divided, right? It's 1, 3, 5, so on and so forth. 1, 3, 5, 8, 13, so on and so forth. Okay. What I'm showing you guys is the 30. It's the 5. Sorry, my bad. It's a 3. Okay. What I'm showing you guys is the 3. The 3 is best used with ICT's concepts. The 5 is best used with my concepts, and the 8 is best used with my concepts. My concepts include the London fractal dealing range, the fractal dealing ranges as a whole, the fractal time principle, which this is a part of. But yeah, I'm not going to plug all that, right? So that's pretty much it. All right, so I hope you found this insightful. And for the guys wondering about the one-on-one mentorship, I'm sorry, it's completely full for November, December, and January 2024. So November, December 2023, January 2024. There are 2 spots open for February. So you guys have all this time to decide if you want to join or not. In the meantime, I will be spamming my YouTube with a shit ton of insightful content, right? So with that said, I'll see you in the next one. Good luck and good trading. Bye-bye.